And good day. This is the Eye of the Storm podcast with the weekly update for the NASDAQ 100 being recorded on Saturday, July the 20th, 2024. I'm going to start on the 3-year weekly chart, and I'm going to start in the NDX, and I'm going to just review the largest degree that I'm counting at this moment. And that would happen to be sitting way up top would be a cycle degree third wave. And so within cycle wave 3, there are going to be 5 waves of primary degree, of which we have 1, 2, 3, and 4 complete. So we're within primary wave 5, which is the last larger rally phase up to complete that cycle third wave. Now, within primary wave 5, I'm going to be looking for 5 waves of intermediate degree. They're going to be labeled in the yellow. And thus far, what we have is complete intermediate wave 1 and intermediate wave 2. So we remain within intermediate wave 3, which is not yet complete. Within intermediate wave 3, there are going to be 5 waves of minor degree, and those are labeled in the orange color, of which we have minor 1, 2, and just completed minor wave 3 this past week. So what we're looking at now is that we have a minor fourth wave decline or a correction. And within that, I've already marked and had kept marked the box where the anticipation or the anticipated fourth wave will get into. If we follow Elliott, what he taught us and continues to teach us is that a fourth wave will find its terminus, its endpoint, within the price territory of the fourth wave of one lesser degree. Well, one lesser degree under minor is minute, and there is the minute fourth wave right in there. So again, that's what we're looking for, but we're looking for it to come down in a minute degree ABC. So minute A, B, C, and then that would complete the minor fourth wave. So let's bring this down, and let's bring it, actually, I just want to take it down. Let's take it to the daily so we can see internally what took place. Here we have minute 4, so we are in the minute 5th. It'll consist of 5 waves of minuet degree. So we have minuet 1, 2, 3, 4, and as we were counting that last 5 up, which took us to approximately July the 11th, is where that top was reached, I'm pretty sure. It was July the 11th. And then it took a while because it hedged around in the possibility that we had one more rally to do, but instead it turned and we started to decline with a little bit more strength. And so we are still waiting for Elliott confirmation. And what I mean by that is if I take it off this daily and I bring it down one more, let's take it down to that hourly chart, and we're looking at the internals here. And so what I normally will use to dictate whether or not we are actually confirming that this high reached on the 10th at 20,690.97, so almost 20,691 here in the cash market, was on the 10th of July. And from that level, excuse me, I'm trying to count 5 waves down to give me confirmation that indeed that fourth wave is in progress, and that would be the high that marks that top of minor 3. So right now, within this process, I have minuet 1, 2, and I'm looking for minuet 3 to complete. And then I got a minuet 4 and then a minuet 5. So we're still a little bit out there before we would actually be done with that first 5 waves down on a minuet degree. Mind you, because why? I'm looking for an minute degree ABC. The first 5 down will be wave A, minute wave A. So we're in that process. And what we've done so far is we've completed, I think, pretty sure that we likely have done this, maybe possibly the 5th wave, but maybe not. So we're still looking for the completion point of the minuet third. So this all, right now, I'm leaving this high in place as the completion point for minor 3 because of the breakdown that how far we're getting. In fact, we came very close to breaking below minuet wave 4, which again would give some confirmation that we've done 5 up, and that should complete then the minuet 5 and that minor third, because we had left it open previously that within the minuet wave 5, that wave 3 was here, and then we had a fourth wave, and this would all be a diagonal triangle. That has now gone because the move down has assured us that that part has been taken care of in terms of we can't allow the overlap, and the fact that the market is still looking like it's going to decline. So now let's bring it up to date in terms of where the cash market is inside this count. So again, we have 1, 2, I'm looking for an additional leg down, which we can possibly say is done at 19,004, what was that low? 19,479, which was Friday. But I can't necessarily, at least on my hourly, count 5 down there. Now I can break it down to the 15, and that would be getting it pretty low to see. So there's the 4. We have 1, 2. We'll see, it just kind of meanders around. So best I can do is 1, 2, 3, ABC 4, and we still have a 5. We still have a little bit more to go, and that's all the way down to the 15. So we're going to bring it back to that hourly chart, and we're going to take a look at, okay, so if we have one additional, at least an additional leg down to complete wave 5, now we've got our fibs for measuring out subminuet wave 5 as it compares to subminuet wave 1. So we see that we've already got to the 100%, which is at 19,503, 504. And we got past it, but then we ended up going back up and then closing above it. So again, maybe we've got 1, 2, 3, and this is 4, and we have one more new low underneath Friday's lows of 19,479.38. So we get below that, then we likely can have this sub-minuet wave 5, and then the minuet wave 3, and then we rally again in a 4. We come back down in that minuet wave 5, and that will then complete the first 5 down. Now, where can we find some support on the cash to start to indicate where this initial minute wave A will come in? Well, as I do in the futures market, I can do here as well. I'm going to go all the way out to here, and right now we have that to give us the indications for the minor fourth wave. Those would come in there. But as I've done before, I'm going to come down to that daily, and I'm going to take a look at this. This rally is 5 waves. So as I've spoken about before, and I'll just speak again, that when counting this initial 5 down, we're going to find our support for those individual waves more than likely at Fibonacci levels within. So what do we got going on? So again, I'm going to go down to this hourly chart so that we have them here. So we can see that we've already surpassed 0.236 substantially. What's up next is 0.382. So could that be where we complete maybe just the 5? And then that is the minuet wave 3 could go in down there. So where we have coming back down, we have 1.618, where wave 5 would be 1.618 times the length of wave 1. First is being equality. We reached it. But we also found that it's likely only 3 down and then 3 up, leaving us with we needed one more new low. Does not necessarily have to drop all the way to this next fib level, but that's what would come up next. Most favored or most common is 100%, where wave 5 equals wave 1. That has been met and closed just above, but still needing slightly some more. We would then bring up the next fib level, which is 19,330.41. That is basis the cash market. And that would be 1.618. Just below that is 382, which is 19,273. So here's my thought. If we come down, we do put in a new low, maybe above this level, but maybe down into here, and it puts in that sub-minuet wave 5, and then the minuet wave 3, and then we rally again in a fourth wave, and a minuet fourth wave. And once we do have that low as firm, we can then run our fibs for the length of the third wave. Excuse me, the length, yes, of the length of the third wave to get where this could come in. We can just take a guesstimate right now to show you what that might look like. And we're going to add our fibs down to just the existing low. We're going to look for something that's going to go below. So here we have them. 382, 19,900, basically. And so if we're going on the previous fourth, that's going to be right there. This is a fourth wave, it's just going up. The previous fourth comes in right there at 19,807. So we have a little bit of a window to where we can get to, and that's going to be 19,784 to 19,901 or 900. And in between it also would work. So and again, that's based on Friday's low. If we have a little bit lower, these are going to adjust down just a little bit. And if it's going to be however many additional points. But I'm just showing you the exercise of what you were going to do. If you're going to put your fibs in, once it's complete and we're getting that rally, you're going to put your fibs in real quick and then get your levels that should be consistent with going back up. Now I'm going to get rid of that one. And I'm also going to clean up this one. And so 618 has already been met. And 1, I'm going to leave as it may supply some additional support, and that support is actually going to go down to that low. And so that low, it was at, oops, I forgot to say accept. And so we're going to edit those properties. We're going to get rid of that. Oops. Oh, come on. Rid of those and going down there. And that low is actually 19,479. So that's where I was basing that on before. So we're looking for it to come below that. And again, does not necessarily mean that we're all need to drop down to 19,330. But the potential is there. And I think both when we get over to the futures market, we're going to see that it is actually more in line with what is likely going to happen. And as if you've already looked at the S&P also needs to look like it needs an additional, possibly a whole fifth wave coming off down to those levels. As in here, it needs an entire fifth wave. If this is 1, 2, and 3, and then this is the 4, and we're looking for that fifth to come down. And again, we'd be putting in fibs pretty much almost in existence here. So we might get down to this level, but then I'd be looking for that fourth wave to come in. So in essence, what it may start, and it could happen tomorrow. So this is going to be an interesting thing, because if I'm looking for a lower opening, it could start in the Globex via the futures market and still play it totally out where it goes down and starts to rally back up, and then leaves the cash market kind of out there in the lurch, so to speak, because we'd be looking for that new low and we may not get it. The market could go down, create a new low for the sequence in the futures market, and then rally back above, starting to put in that wave 4 before the cash has an opportunity to go with. So it's still, though, we can go down, come back, and then still rally back down without putting in a new low in the future, but put that new low in the cash. So I'm going to continue to look for that, and then of course we'll take Monday's trade into what we're thinking and into evaluation once it does occur. So again, for Monday, just kind of looking for maybe a little bit new low, then another rally, then a finishing decline to put in that minuet 5 ways down, and then finish up that minute wave A. Now, whether that's here or whether that's down a little bit further, could go. There's your next support. If 382 breaks, which it could, then our next support is below 19,000. Now, I do believe that the 3 is going to stay in place, but we always must leave open. But right now, if I only get, and it goes up from here, and it goes past 19,800, goes past the hourly 200, which is at almost 20,000 again. If it starts to break above 20,000, it's going to leave this more or less as three waves down, an A, a B, and this would turn into a C wave if that low is not taken out. And that could then be more suggestive that we are going to end up going back above, possibly going to new highs. I'm not sure how that would count on an Elliott basis, but I'm just telling you in terms of the pattern and what would be left. If it's only 3 down, then I'm going to be looking for 5 up again. If I get 5 down, then I'm looking for 3 up. So you can see how that balances out in terms of structure versus the correction that follows. If it's only 3 down, this is the correction. And possibility that I'm going to have to shift around the minuet waves. But right now, I'm not really looking for that, but the market has been noted to hand me surprises all the way along this rally phase. But I do think that a lot of things have turned in terms of this correction, continuing, picking up a little bit of momentum as positions are adjusted and positions are changed. So let's go over and take a look at the futures market and see what we got. Here it's a little bit different, but pretty much in line. And here again, we can see there's the minor wave 3. And then we have 1, 2. And again, I'm looking for that minuet wave 3 to come into play here. So, but we have 1, 2 again on the internal for wave 3, and then a 1, 2, 3, 4, 5 as it's subdivided beautifully. And that was the subminuet wave 3. And then we have the 4, which came here as a clean, a little bit new low there, and a little bit new high there for the sequence, just for the sequence. But it was an A, B, C flat. Very quick, but still flat, and it worked. So we got an ABC flat here, and that came into play, and then we started to head down. Now here as well, I'm going to drop this down to the 15-minute, and we're going to take a look at the inside in here. So there was a finish, and this could be, that was the opening, the high, and then the close was here. And if this was the 4, and then we get, oh, well, I'd have to say, oh, a 1 maybe in here, and 2 maybe. And then a 3 and a 4 and a 5. Is that just 1? Or is this 1, 2? So you can see it got a little bit choppy in here and a little bit more difficult to actually count as complete. So it almost is appearing to me that this might just be wave 1 of 5, wave 2 of 5. If anything, I can get 3 of 5, a 4 of 5, and a 1, 2, and we're looking like we need to kind of drop down pretty quickly within a 5th wave. So 100% is 19,686, but kind of exceeded and then held for the balance of the day, but we're closing just above it. So in essence, what we can get out of this is that we can drop down. Here's 382. That's again for that whole minuet 5th wave. So that's already programmed in. So, they use fibs and the algorithms. So I would suspect that 19,603 or 600 will provide some stronger support. Now, a break, as you're seeing, when we start to get breaks down here, we drop pretty quickly because there's not anything in between. And the way the market rallied on the way up doesn't give us many points to where we can say we're going to find support. As you can see, here in the NASDAQ futures market, we have now slipped below the 4th wave, the minuet 4th wave. So this can no longer be correcting this. So I have to go up a degree, and it's either correcting this minute 5 or the minor 3, which is where I'm taking it to, just because of the sequence going up and what it finished up to this level. So I'm still considering it a minor 4. So in the futures market, we're getting a little more confirmation than we are actually from the cash. Now, again, I'm just showing that what we have, I need to take it out to my 4-hour chart and then open it up from here. And let's see what we got. See, coming down, once we pass that, we don't have anything. Very slight here. Very slight here. You can see how quickly we can start to drop. And once we go below here, 1900, then we got 507 as fib support for the fifth wave. If the fifth wave ends down here and then we rally, okay, very possible. But you can see if we start to break down, there's not much that's going to stop it in terms of support, price support. We have fib levels. That's what we have right now. So we have 19,000. Let me bring it back down to the hourly. We have 19,603. Then if it breaks, just a quick trip down to 19,507. And then again, if it's still inside this subminuet wave 5, fine, then it'll be support. But if that's done and we rise up and we start coming back down within the premise of that it is falling in, first of all, we finish wave 3, we go up in a fourth wave, we come back down in a fifth. That fifth wave would be expected to take out whatever the lows are and likely just keep on going. Then we are kind of going back out to here and here. 2.618 for that minuet. Wave 3, 1.618 has already been taken out. So our next level there on the minuet 3 comes in way down here. So again, if we don't get it to stop somewhere up in here, then we can fall very quickly. So I leave it there as a possibility, not a reality, but just as a possibility. I'm trusting our other fibs to kind of stop it. Then we reset, because that'll be done. Then I reset that goes, and we have different sets of fibs to kind of take us down further. Now again, here on the futures basis, that fourth wave is expected to at least probably come into the area of 17,370. That's the low, actual low is 17,371 or 372. Basis the September contract in the NASDAQ. So again, in the cash market, it's going to be different, obviously, because the cash doesn't trade with premium. It's the cash. So futures trade with premium in them, almost pretty much right up until the time that they're ready to expire. So that should remain the case. So there always will be the difference between the two, and it'll be according to this. So if this decline goes out past September expiration, then we're going to be dealing with the December contract and what price that level produced in the December contract. And we'll update it as if and when it should occur in that manner. Now, 4-hour RSI kind of getting into oversold, not as bad because we kind of came up, but still oversold, a little bit of divergent there. So, but I think we could get down, put in a new low, and then rally in that smaller minuet wave 4. So again, minuet wave 3 completes, hopefully within here. A stronger downswing will bring us up to here. I'm not that I can say, but I would hope that it doesn't really start to slide below 19,507 or 19,500, because again, we have very little support. And you can see how big that little black hole is. There's almost 300 points between the two, and that's if it's dropping in a fifth. It is possible. I have to say, we could start with something bad. We start the week. I don't know how all these expirations worked out and what traders are really satisfied with or not satisfied with, or what do they want to get out of. And again, anything developing worldwide that can torpedo this thing may just happen as well. We've got a lot of irons in the fire, so to speak, that could spark both a rally and a decline. We can't forget that we also are within earnings, second quarter earnings season. Where are we? Well, I think this week we will be hearing from, let me just open this up and put this over here so I can read them. Apple becomes is the 1st of August, but let's see, AMAT is the 15th. AMD, I didn't want that. I want it this way. AMD is the end of the month, so it's July the 30th. Amazon is August the 1st. So we've got, but we do have some that are going to present themselves. In Google, the 23rd, so next week. And we have Netflix was last week. Microsoft is on the earnings on the 30th. So it's not, it's the week after next. Meta, 31st. So the day after Microsoft, we hear from Meta. And let me see, Tesla is on the 23rd. So we have Google and Tesla on the 23rd. So Tuesday, Google and Tesla. So yeah, we're going to see. We'll see how people, where they want it, what they think, and where they might want to peg it. It could get very interesting. So let's up this to the daily and take a look at what our moving averages may be telling us. We can see the daily 20 got broken on the 17th, so on Wednesday, and that kind of drove us down a little bit more. And then we tried to get back to it in the wave 4, but it came down and broke it again. And now within this continuation of the minuet third, but within that 5th wave down, we got almost, we just finished right above at 19,630 is where the, is that true? 19,000, yeah, 19,630 is where this 200 is sitting. Excuse me, the 50 period moving average is sitting. And if it breaks, that and almost that in itself on a daily could produce a nice little, some momentum to sell. It would not be a positive. It turns into a negative because the market then, but if it manages to hold itself above, it's going to go flat, which it's kind of doing now. It's moving sideways, and then it will provide support. So actually, we know we have support at 19,630, and then 19,604, and then 19,507. That window, I'm hoping, should be able to complete this minuet 3rd wave. We get a 4th wave, but yet a 5th wave still to come. And then we're looking at these lower levels. A 5th wave could bring us all the way down now. And you're going to see how quickly we can get into 18,071, which is that level right there. 18,000, actually 18,967. I said 65, it's actually 67. So in the hood. And we're already been as low, below 19,600. So we're looking another 700 points. And we're at the top end here. So again, wave A, wave B, wave C. And this is the zone that I'm looking to get into, likely with wave C, but it could do, wave A could come down and touch the top. We do a B wave and a C brings us deeper into it. I've seen that happen as well. So we've got a lot to do, but I'm feeling not 100% confident because the market doesn't let us do that anymore. But I'm feeling more confident that this minor 3 is in, it's done, and we're working out the minor 4 now. What's still yet to come, folks, let's not forget, this is just a correction. These are the levels that I think will end up at, basis the September contract, and then rally in a minor 5th wave to new highs. And then that'll finish intermediate 3. We come back down in an intermediate 4th wave. And when I'm talking about new highs, I'm talking about probably and well above 21,000. So above 21,000 from minor wave 5 and completing intermediate wave 3. And then we do an intermediate 4th wave, which is likely to bring us back down to that same area wherever this minor 4 finishes up, sets the stage for that intermediate wave 4, which should go back to the price territory of one for a fourth wave of one lesser degree. That's going to be the minor. And then we rally again in intermediate fifth wave. And then again, I'm looking for whatever the high is on the minor fifth wave. I'm going to look for that to be broken again. And this all can happen between now and December, even into the beginning of 2025. A lot of hopes are now laying on the Fed. A lot of hopes are now laying on earnings that these companies are going to continue to just blow the doors off without any reconciliation points that need to be taken into consideration in terms of what the market needs to correct. I don't think there was anybody on the planet that was looking towards what happened on Friday with the CrowdStrike and how it affected Microsoft and what it shut down. It shut down airlines, it shut down banks, it shut down a lot of what we do every day, we use every day. So a mistake, sure. Fixable, yes. But what did it do in the meantime? It shut everything down. It was quite something to kind of see. And what it was just a glitch in a fix, in an updated part of a system. Anyway, so I'm going to look for that completion, look for fourth wave up, look for fifth wave down to complete, get that A wave in, and we get a little bit larger of a B wave retracement back up. And that's going to be it for today. The next Elliott Wave Daily will be on Monday, July the 22nd. In the meantime, have a great balance of the weekend and talk to everybody on Monday.